Hello everyone, welcome to the Stock Minds web channel. In 2025, as gold prices remain elevated and global demand for copper accelerates with the clean energy transition, investors are revisiting mining giants that combine stability with growth. One standout is Barrick Mining, NYSEB, whose latest Q2 2025 earnings confirmed both operational strength and financial momentum. With double-digit revenue growth, surging profits, and a conservative balance sheet, Barrick is positioning itself not just as a safe haven in volatile markets, but as a growth story backed by strong fundamentals and expanding production capacity. In this video, we will dive into Barrick Mining recent earnings, stock performance and valuation, growth potential, and the risks investors should consider. About Barrick Mining. Barrick Mining Corporation is one of the world's largest gold and copper producers. The company's roots trace back to 1983, when it was founded by Peter Munk. Over the decades, Barrick evolved via acquisitions, divestitures, and operational expansion to become a globally diversified mining enterprise producing in multiple jurisdictions across the Americas, Africa, and beyond. While historically known primarily as a gold miner, Barrick also now has meaningful exposure to copper, which helps diversify it into a metal important for the energy transition. Barrick Mining financial performance. Barrick Mining delivered an impressive set of results in its Q2 2025 earnings report, reflecting strong operational and financial momentum. The company recorded revenue of $3.68 billion, up 16.41% from $3.16 billion in Q2 2024, driven by higher production and favorable metal prices. Quarterly earnings per share, EPS, surged to 47 cents, more than double last year's 21 cents, representing an outstanding 123.81% increase. On a trailing 12-month TTM basis, revenue climbed 16.86% to $13.82 billion from $11.83 billion, while EPS, TTM, rose sharply by 85.08% to $1.59, compared to 86 cents a year earlier. Free cash flow generation also improved significantly, with free cash flow per share TTM reaching 99 cents, a 102.04% increase from 49 cents last year, highlighting Barrick's growing cash efficiency and operational discipline. Profitability remained solid, supported by a gross profit margin of 44%, net profit margin of 19.99%, and a free cash flow margin of 12.41%. The company's efficiency is strong, with a return on assets of 7.73%, return on equity of 12.15%, and a conservative debt-to-equity ratio of just 0.14, indicating low leverage and financial flexibility. Over the past 5 years, Barrick's financial performance had been declining until 2022, but has grown steadily since then. The high gold price makes Barrick's future financial performance projected to grow significantly. Barrick Mining Fiscal 2025 Financial Forecast. Looking ahead, analysts forecast Barrick's 2025 revenue to reach $15.49 billion, a 19.86% increase from $12.92 billion in 2024, and expect non-GAAP EPS to grow 63.41% to $2.06, up from $1.26 last year. Reflecting this strong outlook, analysts maintain a buy rating on the stock, with an average price target of $37.75, offering an 11.18% upside potential and the highest price target of $47.50, implying as much as 39.89% potential upside from current levels. B stock price performance and valuation. At the time this video was created, the stock was trading at $33.95 per share. The stock has surged 71% in the past 12 months, significantly outperforming the S&P 500's 17.8% gain during the same period. However, looking at a longer horizon, Barrick's 5-year return of 21% still lags behind the S&P 500's 92.9% increase because of weakening fundamental in the past. In addition to that, the stock also offers dividend yield of 1.33%, providing additional return for investor. From a valuation standpoint, the stock remains attractively priced relative to its growth trajectory. Barrick currently trades at a price-to-sales PS-TTM ratio of 4.26 and a forward PS of 3.74. Its non-GAAP price-to-earnings PE-TTM ratio stands at 21.49 and forward PE of 16.49. Meanwhile, its price-to-free cash flow PFCF ratio is 33.78. Based on Fiscal.ai data, if we look at the valuation over the past 5 years, the forward PS is above the average, and the forward PE is below the average. The forward PE suggests there is potential upside for the stock, especially with gold prices continuing to trade at a high level. Barrick Mining growth potential. Barrick Mining growth prospect remains strong, driven by several factors. 1. Exceptional reserve replacement and resource growth. Barrick Mining has consistently demonstrated industry leadership in reserve replacement, substantially replenishing depleted resources. In 2024, the company increased its attributable proven and probable gold mineral reserves by 17.4 million ounces before depletion, totaling 89 million ounces at 0.99 grams per ton, a 23% increase year over year. This growth was mainly driven by converting Reko Dig copper-gold resources to mineral reserves, adding 13 million ounces after a feasibility study. Even excluding Reko Dig, Barrick replaced its annual depletion for the 4th consecutive year, achieving a 4% higher grade, highlighting its focus on quality and extended mine life. Since 2019, the company has replaced over 180% of depleted gold reserves, adding nearly 46 million ounces in attributable proven and probable reserves. Additionally, copper mineral reserves surged 224% year over year with a 13% grade improvement, providing a solid foundation for long-term production and sustainable value creation. 2. Transformational Tier 1 project pipeline. Barrick's project pipeline is among the most valuable in mining, anchored by 2 transformative Tier 1 projects shaping its future production and footprint. The Reko Dig project in Pakistan is one of the world's largest undeveloped copper-gold deposits, with reserves of 5.9 billion tons grading 0.41% copper and 0.22 grams per ton gold. Early construction began in 2025, targeting production start by 2028. This $7 billion joint venture expects to produce 200,000 tons of copper concentrate and 250,000 ounces of gold annually over a 40-year mine life, contributing $5 billion to Pakistan's GDP. In Zambia, the $2 billion Lumwana expansion aims to increase copper production from 30,000 to 240,000 tons by 2027. Combined with the Nevada 4 Mile project, these underpin Barrick's goal of 30% growth in gold equivalent ounces by 2030 and long-term sustained value creation. 3. Strategic diversification into high-growth copper market. Barrick's strategic shift toward copper positions it to benefit from the accelerating global energy transition and rising copper demand. The company is rebranding from Barrick Gold Corporation to Barrick Mining Corporation, reflecting a more balanced portfolio where copper will contribute 40% of EBITDA by 2030, up from 15% in 2023. Copper demand is expected to grow up to 70% by 2050 due to renewable energy, electric vehicles, and grid upgrades. Barrick aims for a 50-50 revenue split between gold and copper by 2035, reducing commodity price volatility while maintaining gold's safe haven appeal. The strategy leverages the company's expertise in developing large, low-cost, long-life copper assets. CEO Mark Bristow calls copper the metal of the energy transition. By 2030, copper output is targeted to nearly triple to 1.2 million tons annually, enhancing Barrick's role in the copper market and diversifying its commodity exposure. Risks to consider. While Barrick Mining stock looks compelling, we should be mindful of potential risks. 1. Leadership and strategic uncertainty. The sudden resignation of Barrick Mining's longtime CEO Mark Bristow after nearly 7 years of leadership, has stirred uncertainty about the company's strategic direction and future stability. Mark Hill, an experienced executive, has been appointed interim CEO while the board searches for a permanent replacement. This leadership transition raises concerns about operational focus and investor confidence amidst ongoing challenges and opportunities at Barrick. 2. Political and regulatory risks in Mali. Barrick's operations in Mali face major uncertainty due to the expiration and challenging renewal of its key gold mining license for the Loulo-Gounkoto complex, set to expire in February 2026. The Malian government's provisional administration, ongoing disputes over mining revenues, blockades on gold exports, and detention of Barrick staff have halted operations, posing significant risks to production and revenue from this crucial asset. 3. Capital allocation and cost pressures. Disciplined capital spending is essential for Barrick to fund exploration and growth projects, but rising all-in sustaining costs, maintenance capex, and increased shareholder returns through dividends and buybacks limit funds for expansion. Balancing operational costs with rewarding shareholders creates challenges in maintaining sufficient capital for long-term growth. Barrick has authorized a $1 billion share buyback while prioritizing capital efficiency and targeting high-return projects, yet this careful financial balancing introduces risks to sustaining consistent growth potential. Conclusion. Barrick Mining demonstrates a strong balance of growth and value following its impressive Q2 2025 performance. With robust revenue, earnings, and free cash flow growth, solid margins, and a conservative balance sheet, the company is well positioned for continued success. Its valuation remains attractive given its earnings momentum, low debt, and steady dividend. Supported by rising gold and copper demand, Barrick offers investors a compelling opportunity for long-term growth and capital appreciation in the mining sector. But remember, this is not a financial advice. What do you think about Barrick Mining? Are you buying, holding, or passing? Drop your thoughts in the comments below. If you found this video helpful, please make sure to like, subscribe, and hit the bell so you don't miss my next stock analysis. Thanks for watching and see you in the next one.